Let me show you a very simple entry which will help you become more consistent. So this is a higher time frame. As you can see, price is breaking lower, respecting this area of imbalance. Now pay attention to what's going on 4-hour time frame, because you can see the price is actually respecting this sell side imbalance right here, and we've now got a clear draw on liquidity. Now very simply, if we zoom in, there's two areas I'm particularly focusing on for a retracement to take this thing lower. I don't just want to sell it here because that is internal liquidity. Basically, a lot of people are going to be looking for sells there. I'm looking for more of an area inside a premium zone, which is the high of this range. So possibly inside this area of imbalance. If price was to reach higher than this level, we could get another reaction out of this area of imbalance above this liquidity as well, because we're always looking for a draw on liquidity. So fast forward, we can see price is reacting from this area of imbalance here, and that's absolutely fine. So as you can see, we've had a nice reaction out of that 4-hour imbalance. Now on a smaller time frame, we can see another area of sell side imbalance. That is an area of inefficient price action. Price needs to come back and rebalance into that area. That is extra evidence that this is a high probability setup. We are also at the start of the London session as well. So you could enter inside this imbalance, stop loss above the high, liquidity down below. And as you can see, this trade would have got you into some decent profits. So all you're looking for is a draw on liquidity and an area of sell side or buy side inefficiency that lines up with your overall bias. Go and backtest this. Let me know how you get on in the comments. One thing you will notice as your trading career progresses is that you will eventually find your own style in how you actually enter the markets. In terms of entries, people overcomplicate this a lot, but to keep things as basic as humanly possible, when entering in a bullish environment, we want a discount area. Inside that discount area, you can enter off of order blocks, imbalances, or breaker blocks, or just a general optimal trade entry level. Now, the secret that a lot of people don't tell you is that it doesn't really matter where you choose to take your entries. For example, I like taking entries at 50% of the imbalance line. But you can also see in this example, we've got a breaker block, which you could have entered within. You could be looking at this order block for better risk reward, or you could measure the trading range and very strictly just look to enter at the start of your OTE level. These areas are parts of price where we can expect reaction in the markets. These are the ones which give us high probability setups. So as long as you're in line with market structure, and as long as you trust your setup, you will eventually find what works best for you. For me, it's imbalances. For you, it might be breaker blocks. It might be order blocks. It might be optimal trade entry areas. But the thing you've got to understand and remember, it does not matter. So my biggest piece of advice to you is just keep practicing, keep working hard, do not quit, and eventually your trading style will come out naturally. Have you ever considered the fact that your trading career will skyrocket further than you ever thought was possible if you stop overcomplicating it and you just focus on the basics? All you need to understand is that the market is looking to achieve two things: seek areas of liquidity, rebalance into areas of inefficiency. Price recycles these very two things. Once areas of inefficiency have been rebalanced, price will head towards areas of liquidity. So knowing what we know, how can we actually enter in the markets? Well, let's take this area of inefficient price action here, for example. If we go to a smaller time frame, you will see that price is dropping to the downside and creating another area of inefficient price action. You could enter anywhere inside this area of inefficiency, targeting liquidity. But let's say you miss this entry as well, or you want a little bit more evidence. Let's go down to an even smaller time frame. You can see that price is dropping to the downside, price pushes higher and then drops from this area of inefficiency. You could enter in here. Now let's say you miss this entry once again. As you can see, price has dropped aggressively to the downside, leaving another area of inefficient price action, and it's heading towards sell side liquidity. This type of behavior with price is very basic, but this is all you need to absolutely crush it in the markets. My philosophy, the way I trade, the way I teach people is just to keep things as basic as humanly possible, because that's the easiest way to be successful in this industry. This could be the biggest light bulb moment for you in your trading career. Watch this video as many times as you need to. Each candle is a daily candle. You can see here that we're bearish. If you want to sell in direction with the daily time frame, you need to be selling above the opening price. For example, if price opens where this line is here, natural price action usually means that price would move higher first. This is where you want to sell because you are above opening price. And when you do sell, the candle will do something like this, and it would leave behind a wick exactly like this candle right here. Price makes a low, ends up retracing back, meaning the candle looks something like this. Let me show you the entry on a small smaller time frame. These two blue lines here indicate 1 day of price action. This line right here is the opening price. As you can see, price expanded to the upside and then dropped lower. But if you look to the left of your chart, you will see a clear area of inefficient price action inside a premium area of the entire range from a higher time frame, which identifies a key area which you could sell from. As you can see, price drops lower and then comes back in, retesting this order block right here. This could be your entry because you are above opening price. You can find high quality setups exactly like this all the time as long as you are following the trend of the higher time frames. I challenge you to backtest this and see for yourself.